All right, we have now heard from the Federal Reserve. They did increase the federal funds rate by 0.75% today. So let's jump right in and see how the markets are responding now after they've had a couple of hours to start digesting this information, because we've actually kind of had a double knee-jerk reaction, and I'm going to explain that here in just a moment. But remember, we wanted not only for the Fed to increase the federal funds rate by 0.75%, which was highly anticipated, but we were really looking to see what their comments were about what they were going to do in the future. And it sounds like we had a little bit of comment from them that we really didn't like to see. So the market is having a negative response to that today. Let's take a look. All right, so again, today is November the 2nd, 2022. Welcome back to the Brent Bruce Daily. Let's take a look and see the comments here from CNBC showing the Fed approves a 0.75 point hike and taking the rates now to the highest since 2008 on the federal funds rate. But in here, if you were to read through some of the details, it talks a little bit more about the fact that they are willing and able, or possibly even thinking they may have to go a little bit further in their monetary policy adjustments than what they had previously been saying they would go to. So they're starting to say like, hey, we might have to increase the federal funds rate a little bit more than we had talked about previously. But then kind of came back around on the backside and said, however, if we start to get reports that are in line with what we're hoping to see, some sort of a response to the adjustments that we previously made, we may go ahead and start tapering our funds rate increases, which is what we want to hear. So really kind of talking out of both sides of his mouth there. So if you take a look at the mortgage-backed security charts, take a look here. So when they made the announcement, it initially came out, mortgage-backed securities rallied, broke above the 25-day moving average, and they were up about 27 points at that moment. Then the comments started coming out from Jerome Powell. And you can see that it pushed down very quickly, stayed in this range most of the day. And now we're actually, a minute ago, you saw that it was down 66. Now we're down 39. Not a good day. So really not liking what we're seeing. However, as we talked about, we have to wait and see after the market digests this information a little further. Right now, we are up 5 on the 10-year Treasury. Again, at 410, we were really hoping that today, or at least in the next day or two, we'll see us drop down below the 4.0 on the 10-year. And also that we would, in the next couple of days, break above this 25-day moving average, which is really going to start to show us moving to lower interest rates. However, we did talk about that it is going to maybe take a couple of days for that information to start to just kind of really be digested. And that's kind of what we saw, that double knee-jerk reaction. When the Fed made their announcement of 0.75, immediately we shot up 25 basis points. Then they start talking about the monetary policy going forward and made some comments that we didn't especially like. Boom, second knee-jerk reaction, and the market drops down quite a bit, and we lose like 50 or 60 basis points in a matter of about an hour. Now we're kind of back into the middle here, still down for the day, but we've regained some of those losses as the market is digesting this information. And that's what we hope is going to happen over the next couple of days. So let's take a look here at where we are on our Brent Bruce Daily home loan interest rate. How is this actually affecting our home loan interest rate? So we're going to pull this up here. This may take just a moment to load since I am traveling and operating on my cell phone Wi-Fi hotspot right now, but it's just pulling this information up, and we will take a look and see. Remember, yesterday we were talking about that we closed at 6.875, and we were kind of surprised. I was kind of surprised that we had gone down an eighth in the day before a Fed announcement. So it made me feel like there was a lot of confidence that the Fed was going to fall in line with what the markets were expecting. However, it looks like the Fed was a little bit out of line of what the markets were expecting. So let's take a look and see where we are. We were at 6.875 yesterday on our very well qualified 30-year fixed conventional home loan. Right now, we are at 6.999. Okay, so we do have an increase in home loan interest rates so far today, but we're staying below that 7.0, which we continue to talk about is just that prediction that we will not go up into the sevens for a prolonged period of time on the Brent Bruce Daily. This is the benchmark that we're using. Okay, so we're at 6.999 with $263 in lender credit. Love to see that we're not in the sevens after a little bit of disruption in the announcements from the Fed. Here are our parameters to put those up for compliance purposes. And yes, these are the real interest rates. We're not adding any discount points or anything like that on. So here we are at the end of the day now. The market is now closed. The bond market is now closed. It's 4:00 p.m. Central Time. And we are down a little bit after the Fed made their announcement. of 0.75% increase to the federal funds rate. That does not mean that home loan interest rates are going up by 0.75%. Do not let people believe that. That is not correct. And you know that's not correct because you watched this report and you've seen that is not what has happened in the past. So let's go ahead and see what happens as the market digests this information. Hopefully it will be as I expected, that after things settle down, we'll start to break below the 4.0 on the 10-year treasury, and we will break above 25-day moving average on the mortgage-backed security on the 5.5 coupon, which we've been following here. I will keep you posted. Let me know your thoughts, questions. Make sure that you like, subscribe, and share. And let's get this information out to more people. Thank you so much. We'll talk to you again soon.